Bitcoin has dropped below $100,000. The Fear and Greed Index is flashing fear, and more than $1 billion in leveraged positions were wiped out in a single weekend. Yet, just as the bears were sharpening their claws, the price suddenly ripped back above $105,000. What on earth is going on? Is this just a dead cat bounce before a much deeper crash? Or was this the final brutal shakeout before the next explosive leg up to new all-time highs? Today, we're going to dissect the anatomy of Bitcoin's perplexing price action. We'll break down exactly what happened last week, why the market panicked, and how it managed to recover. Then, we'll analyze the single biggest catalyst on the horizon, the end of the US government shutdown, and the multi-$100 billion liquidity bomb it's about to unleash on the markets. Finally, we'll explore the key price levels, the powerful catalysts, and the dangerous headwinds that could determine Bitcoin's fate for the rest of 2025. My name is Kalen, and you're watching the Kalen Moss channel. Let's go! But first, a little housekeeping. Nothing in this video is financial advice. It's educational content designed to inform you about the forces shaping the crypto market. If that sounds good to you, make sure to show your support by hitting that like button and subscribing if you haven't already. After reaching a new all-time high of over $126,000 in early October, Bitcoin began a steady decline. That downtrend culminated over the first weekend of November when the price broke below the critical psychological support at $100,000, plunging to a low just under $97,000. This marked the first time Bitcoin had traded below six figures in more than 4 months, triggering widespread panic across the market. In total, over $1.7 billion in leveraged long positions were liquidated, wiping out traders who had bet on a quick recovery. So, what caused this brutal sell-off? It was a perfect storm of three major factors. Broader risk-off sentiment. Traditional markets were showing clear signs of risk aversion amid concerns that the AI-driven stock boom was becoming overheated. Since many of the same investors trade both tech stocks and crypto, when one market gets sick, the other often catches a cold. Long-term holder selling. On-chain data revealed that long-term holders were offloading significant amounts of Bitcoin. In October alone, they sold more than 100,000 BTC. This steady stream of selling created a formidable headwind, and we'll come back to this point later. Retail exhaustion. After months of choppy, indecisive price action, many smaller investors had reached what one analyst described as max desperation mode. But just as things looked their bleakest, a floor formed around the $98,000 to $99,000 range. The price stabilized and began to climb back, reclaiming $105,000 by November 11th. What stopped the bleeding? While retail investors were panicking, institutional players stepped in to buy the dip. After 6 consecutive days of ETF outflows, US spot Bitcoin ETFs suddenly flipped back into inflows, recording a massive $240 million influx on November 6th. This signaled that institutional demand was returning, helping absorb the selling pressure. Simultaneously, on-chain data shows that crypto whales accumulated an estimated 68,000 BTC during that one-week dip. This is a classic pattern. Retail sells in fear, while smart money accumulates at a discount. The market flushed out excess leverage, found a strong base of institutional buyers, and began its recovery. The real catalyst, Washington, D.C. The technical recovery is only half the story. The biggest reason for renewed optimism isn't found on the blockchain. For 42 days, the US government had been in a partial shutdown, creating massive uncertainty for the economy. But over the last few days, a breakthrough finally arrived. Late Monday night, the Senate passed a bill to fund the government, and the House is expected to vote and pass it as early as Wednesday. This development is extremely bullish for one key reason: liquidity. To understand why, we need to talk about the Treasury General Account, TGA, the government's main checking account at the Federal Reserve. During the shutdown, tax revenues continued flowing in, but government spending slowed to a crawl. As a result, the TGA balance swelled to a staggering $1 trillion, effectively sucking about $700 billion of liquidity out of the financial system. Less liquidity means less capital available for risk assets, a major factor weighing down both stocks and crypto in recent weeks. Now that the government is reopening, that process is about to reverse. As the Treasury begins spending again, the TGA balance will be drawn down, injecting hundreds of billions, up to $850 billion, back into the market. This massive liquidity snapback acts like turning on a fire hose of capital right as we enter the historically strong year-end period for Bitcoin. Where could Bitcoin go next? We now have two key elements in play: a technical recovery from oversold levels and a massive liquidity catalyst about to be unleashed. So, where could Bitcoin head over the next 2 months? Analyst sentiment is largely bullish. Michael Saylor is sticking with his $150,000 target. Matt Hogan, CIO at Bitwise, believes new all-time highs above $125,000 to $130,000 are easily achievable. Analysts at JP Morgan have a year-end target of $165,000, assuming the market reclaims key levels. But to get there, Bitcoin must navigate a battlefield of support and resistance. Key levels to watch. Support levels. The most critical level is $100,000, now both a psychological and technical floor. The market has shown it will defend this level aggressively. However, a sustained break and close below it would be extremely bearish, opening the door to a deeper correction. The next key support zone sits around $95,000, where medium-term holders have their cost basis. The ultimate line in the sand lies at $88,500, the active investor realized price. Resistance levels. The first major hurdle is the $110,000 to $112,500 zone. According to Glassnode, $112,500 is the average price that short-term holders purchase Bitcoin at, meaning most of them are currently underwater. For the bull trend to resume, Bitcoin needs to reclaim this zone and flip it into support. If that happens, the path is open to retest the previous all-time high near $126,000. Catalysts and risks ahead. While the setup looks promising, Bitcoin still faces a wall of worry. Let's look at both sides. Bullish catalysts. The Federal Reserve currently has a 68% probability of another rate cut at its December 10th meeting, which would further support risk assets. With the government reopening, the SEC can resume reviewing its backlog of crypto ETF applications. A wave of altcoin ETF approvals could generate a powerful surge of positive sentiment across the entire market. The biggest red flag remains the ongoing long-term holder selling. Since July, this cohort supply has dropped by 300,000 BTC. Unlike earlier in the cycle, when they sold into strength, they're now selling into weakness, signaling fatigue and waning conviction among veteran investors. This is currently the most concerning bearish data point. Additional risks include potential ETF outflows, a hawkish Fed surprise if rates aren't cut in December, and tax loss harvesting pressure toward year-end. Bitcoin now stands at a critical crossroads. On one hand, the market has survived a brutal technical test and is about to receive a once-in-a-cycle liquidity injection from the US Treasury, a profoundly bullish setup that could push prices back toward all-time highs by year-end. On the other hand, there are worrying signs of long-term holder fatigue, suggesting that the underlying market structure isn't as strong as it was months ago. Persistent selling from these early adopters could absorb much of the new liquidity and keep Bitcoin range-bound. So, is the dream of a bullish end to 2025 dead? Absolutely not, but this is no longer a simple game of hype and narrative. The resolution of the government shutdown provides the fuel, but the market engine is showing signs of wear. The battle over the next 2 months will be fought between a flood of new liquidity and a stubborn wall of overhead supply. The first major test, reclaiming that $110,000 to $112,500 zone. If the bulls conquer it, the path to new all-time highs opens wide. If they fail, expect a longer, more frustrating consolidation period. So buckle up, The next few weeks could define the entire crypto narrative heading into 2026. And if you'd like to understand how the US government accidentally became one of the world's biggest Bitcoin whales, check out our deep dive linked right here. Thanks for watching. If you haven't subscribed yet, why not? Click that button now. This is Kaylin signing off.